Okay, on to one more exclusive piece of news, and India's monopoly watchdog, the CCI, has now decided to focus on its attention on the country's oil subsidy regime, more specifically the diesel subsidy that is being given to fuel retailers. Devdatta, who's got exclusive details, joins us right now with them. Devdatta, so what is CCI wanting to do and what has prompted this move?
Neeraj, is the CCI flexing its muscles like never before. Basically, the CCI has taken into cognizance the problems that for oil marketing companies like RIL, SR and Shell have raised over the few months, which is basically the diesel subsidies that are given to the government-run oil marketing companies, which create a restrictive environment for doing business for them. They say that it is an unfair mechanism which leads them to lose business on a huge margin basis, and that is why they have approached the electricity appellate. The CCI is very keenly watching on the outcome of the electricity appellate to take a call. What the CCI can do is issue a directive to the government saying that it is an anti-competitive law to give diesel subsidies to government oil marketing companies and let the private ones be creating an anti-competitive business environment, and may issue a directive to relook at the diesel subsidy regime. This could be significant in terms of the oil subsidy regime, the oil subsidy or the subsidy regime that the government follows for its for the government-run companies so far, and could be a game changer as far as the subsidy regime is concerned here on.
We'll watch out for that as and when the action does get taken on this one. Devdatta, thanks so much for joining us with that quick update and telling us what the CCI is looking to do. Mind you, Reliance, SR, Shell, all of these, of course, want this to happen sooner rather than later. What we'll do is take a quick break on this note. We'll come back, talk more about stocks, get in a fundamental view as well. Sanjay Dutt would be joining us on the other side to speak about his sense of the markets, the current scenario and the near future. In the meantime, here are Motilal Oswal, Chairman and Managing Director of Motilal Oswal Financial Services, on the sidelines of their conference.
Robust growth cannot come in next 6 months. Definitely, I think there are some companies, I would say some sectors which are doing very well. So it has to be bottom-up approach, and our approach always has been not on the top-down but on bottom-up kind of approach, where we keep on looking at the right sectors. Some of the consumer sectors like say FMCG or maybe auto, I think, or pharma, or even IT, those sectors I would say doing well, and some of the sectors which are going through stress would be say infrastructure or power or maybe sectors like engineering. We anticipate that the GDP growth is slowing down and there will be further kind of downward revisions. But as far as corporate profits are concerned, we have seen that now there is some kind of upward revisions in our estimates. For the last 2 quarters, we have seen some kind of upward revisions. So that's a good sign. We feel that there is a kind of still some room for appreciation for those kind of sectors, FMCG, pharma, and auto. On the kind of negative sides, or maybe I think one sector which is not doing so well and where we think that margin of safety is very high. Looking at the banking sector, especially the public sector banks, where I think one can take the bet, take slightly higher risk and put in the money at this kind of levels. On the negative side, I would say that still there is no kind of visibility on the real estate side or on the infrastructure side or on the power side or cement side. These are all kind of very cyclical businesses. So right now I would say that wait and watch on those sectors.